We're back on the Halftime Report, answering your questions now. First up, Jimmy got for you. Verizon and AT&T, and it's from Justina in Florida. Thank you for your question. Are they impacted by the tariffs? What do you think of these stocks?
Look, I like them in the long run. I'm not worried about tariffs here at all. I mean, most of what these guys make are produced here in the United States, right? We're talking about cell phone service, or in the case of AT&T, we're talking about content from the Time Warner deal. The problem is these are mainly distribution companies still, and there's all this creative destruction going on in terms of content versus distribution. AT&T, I actually think, is well positioned with Time Warner, but they're getting punished by the market because of the high debt load they took on to close that deal. They're fine, but I'm not worried about tariffs here. I'm just worried about this creative destruction with other companies.
Okay. Brenda, you own AT&T. Joe, you like Verizon, and you have for a while. Let's hear AT&T first, and then we'll go to you on Verizon.
Yeah, AT&T, as Jim said, have great assets with Time Warner. This has some great hits. There's a lot of concern about the integration of those assets and the debt level, but nevertheless, the stock is trading at 8 times forward earnings. It's really cheap, high dividend yield. We're willing to take a bet on that, and we continue to like it.
Okay, so that's a yes on T. What about VZ?
5G is going to be such a catalyst for technology, and Verizon is beginning to roll it out. They rolled it out in Houston. I'm beginning to see that a lot of that is priced in. Let's not take what I'm about to say as I believe Verizon is going down, but the position that I have, I will take that position. I will cut it in half over the next couple of days.
Okay, good stuff. Thanks to you both. John. International paper comes from Steve from Roanoke. Started a position in IP. Steve says because the dividend, it continues to drop, which I like while accumulating it, but it's not showing signs of recovering. Dead money or not?
I don't think dead money, but obviously Wall Street's not on board with this one yet. Goldman cut them back on October 10th or so, and then Argus came in right after these earnings. The earnings were blowout, great earnings, and the stock bottomed down there at about 39. It's moved up to 45. The target by Argus was moved up from 55 to 75. Like that, I think this one's underloved, and that's why I think it could outperform.
Okay, good stuff. Thank you. Steve, thanks for the question. Amit is asking Joe about Nike. It's down. It's still a good time to buy it?
It certainly is. I bought it last week, last Wednesday on the 20th. It reached a 6-month low. I think on the back of Foot Locker's earnings, it's a tremendous opportunity. I think there's a lot of momentum there. They report earnings on December 20th, and our friend John Rogers from Ariel Investments joined the board.
Some friend. I don't even remember his name.
John Rogers is now on the board of Nike. How about that?
That's
pretty
right.
Cool.
All right, Surat, got one for you from Dino. XPO Logistics. Are you still a holder of it? Would you buy more?
So the answer is yes and yes, and we have been adding to positions and especially new clients. XPO is now trading at 9 times forward earnings. The stock was trading at over 14 times earnings. It's got great growth rate. What happened was in the last quarter they missed guidance for the first time in 5 years for cash flow. We think that's just an anomaly. They have a lot of cash that they can use for acquisitions.
Okay. Here's a question everybody wants to know the answer to, Jimmy, and it's regarding Apple, and it comes from Tyler in Ossining, New York. Sell-off overdone or not?
It is overdone, but that doesn't mean it's done. Look, it's not done until you get some feedback on the holiday selling season, which I expect is going to be much more positive than the market is predicting. Another positive thing, not just for Apple, but I want to bring up the comments that Jim Cramer had with the CEO of Qualcomm last night, saying that we're in the fourth quarter of a resolution possibly coming between Apple and Qualcomm. That's good for both companies. And the reason it's good for Apple is it absolutely makes their phones have the best technology if they're using Qualcomm components. So that's a catalyst too. But until you get holiday season reports, I'm not going to add to my Apple position yet.
Brenda, Apple, you own it. What are you thinking about these days?
So we actually reduced it to an equal weight position versus the S&P, so not willing to go completely underweight and out of it. But think a little bit of caution is warranted, but think this pullback is overdone, but we're not willing to say we're going to bet against Apple. So we're not taking a bet for or against, but we have a neutral position.
I should point out, I still have the position. You'll remember, Scott, I trimmed it 2 days after the earnings call. I took a third off. I will put that money back to work, but not today.
You were mad about the transparency, for one thing.
I was mad about the transparency, but the narrative changed on that earnings call. I mean, the narrative on Apple is they're now not selling as many iPhones as everybody expected. Until that narrative changes, I don't really want to put those extra shares back to work, but I will at some point.